Welcome back, traders, to part 3 of my backtesting guide. Now, initially, I did not intend to have multiple parts, but as I was recording, I thought it would be easier for you to digest if I split it up. But this will be the final part of the guide, even if it does go a little long. So in part 1, I went over how to build a model, and I gave you an example. Hopefully, you've built your own model and have it in front of you so you can follow along as I backtest today. If not, I recommend you go back to part 1 and create your own model. I will have both parts 1 and 2 linked in the description. Now in part 2, I went over how to record your data. I gave an example of an Excel spreadsheet. That video was not very long, but you'll want to pause a lot so you can look at and understand my formulas that I used. If you haven't put together your own spreadsheet yet, I recommend you go back to part 2, and once you've done the work from parts 1 and 2, then come back here to follow along with the backtesting. And before we begin, I would like to ask you to help me out by giving this video a like and subscribing, because after this part 3, the rest of this playlist will be of me backtesting all of 2024. So thanks so much, and let's get started. So of course, the first thing we need in order to backtest is our market data. There are plenty of backtesting softwares that can be purchased online. I don't have any particular one in mind, but if you want it, I'm sure you can find it with just a few minutes of searching. But I'm going to show you how to do it in the quote-unquote free way. So I'm sure you've heard of the very popular trading platform TradingView. Now, I'm not sponsored or affiliated with TradingView in any way. They don't pay me any money. I'm just highlighting this platform because it is very, very popular. It is free. I'm on the free account, but the free version does have a lot of limitations on some features, but you'll have no problems using it for charting and trading. Now, through the trading panel, you can connect to your broker, and then you'll get your broker's data feed, and you can trade your brokerage account on this platform. TradingView also has a paper trading simulator you can use to paper trade, but enough of all this, I want to talk about backtesting. Now, there are basically two ways you can backtest. Firstly, you can backtest your model by looking at a still image of a historical chart, kind of like what you see right here, and hypothetically going through the day's candles. Now with TradingView, you can go back to the intraday charts of previous day, but there are limitations with the free version. Now you can easily do this by clicking on this calendar icon here, select the date you want, and then click go to, and then boom, you'll be teleported back to that date. You can then run through that day and backtest your model, record the results. However, if you try going back real far, let's go back to 2020, you'll see this is as far as I can go back on a 5-minute chart. The free version only allows 5,000 candles. You may or may not see this here asking you to purchase an upgrade to show you more candles. Right now I'm on the March contract for NASDAQ minis, but if I do the same thing on the continuous contract for NASDAQ, okay, and I go back all the way, you can see I don't get that upgrade advertisement anymore. Now, this is based on the number of candles. So if you trade on a higher time frame, like the 1 hour or the 4 hour, of course, you can see that you are able to go back a little bit further. Right here, it is January 2024. And as far as I can tell, this limitation is not on the daily chart. You can go all the way back to this dinosaur icon, which marks the very beginning. Now, the second way to backtest, also called mock testing, you need to have some sort of market replay where you simulate the chart as though it was a specific day and then play out the candles as though it was like live data. TradingView does have market replay, but on the free version, you can't use market replay on intraday charts. You'll see you'll get this payment screen asking you to upgrade. There is a 30-day free trial. I've never used it. I don't know how it works, but you might be able to open multiple accounts and keep using the free trial for your backtesting. But that's not something I condone. I'm not advising you to do that. Now on the daily chart, there's no market replay limitations. So I can show you how it works here. After you click the replay button, just select a day that you want to replay. So let's suppose it is the 13th of April, 2023. And then boom, there you go. The chart looks like how it would on that day. Now you'll have this replay bar where you can go ahead and click through to show the next candle one at a time. or you can play through each candle automatically. But as you can see, the candles populate very stilted. It just shows you the candle at its close. There's none of the up and down movement you would see with live data. So between the two ways of backtesting, I prefer mock testing. It does take a little bit more time, but I like not seeing the whole day's action before backtesting my entry. I just feel like it simulates a more realistic situation, but I'm going to backtest on another platform rather than TradingView because as you can see, I'm not able to backtest on the intraday charts. Okay, so I'm going to be using Thinkorswim for my backtesting. Again, I have no affiliation with this broker. I don't get paid. I'm just using them because they offer free market replay. Now you do have to open a real money account with them, and it's been years, so I don't remember if you need to deposit a certain amount or not. You may not need to, or it may just be like $1,000 or something, but you can always withdraw the money back out. Now, whatever you need to do, you'll want to have access to this on-demand feature. This is their market replay, and I'm going to show you how to use it with a backtest example. Now on my screen, I'm on the flexible grid view, and this is the display setup I recommended in the price delivery continuum video. Check that one out if you haven't, because that was a pretty good lecture. But here I have my 1 hour, 15-minute charts on the left, and 5-minute is the bigger one on the right. But you can easily change this to 15 minutes, 5-minute, and 1 minute if you like. The point is you can have all your time frames on one screen, so you don't have to constantly cycle through on one chart. But for this video, I'm actually going to go to the charts view and just have one big chart so it's easier for you to see. Okay, now to start backtesting, go ahead and click on demand. You can tell you're in on-demand mode if you see a yellow border around your Thinkorswim window. Also, it should show on demand in the upper left. Okay, so we want to select a specific date. Go ahead and click here to show a calendar, and I'm going to go ahead and use January 1st, 2024. And you also want to make sure that you choose your time. I'm going to go ahead and use 5 o'clock p.m., the close of day. Now, January 1st is a holiday, but I want to do my higher time frame analysis the day before. I don't want to see the daily candle for the day I'm actually mock testing, which for this example will be January 2nd. Go ahead and click go. And now you'll see the charts as though it is January 1st. So I am on the weekly chart. Now remember, on my higher time frame, I'm looking for two things: the direction I want to trade in and nearby PD arrays for targeting. Obviously, the market has been bullish, so I want to go long, but we are at all-time highs, so there isn't any PD arrays above us that I can target. Now what I can do is I can project a target using the most recent intermediate low to the intermediate high, and I can aim for a symmetrical swing. Now I also have to consider what's below us, because we just took the buy side liquidity. We could come down for a retracement. The obvious gap is this weekly void where there's no buying or selling, but I also want to make sure I note this weekly BISI as well. So I'm going to go ahead and draw it like this to include this entire inefficiency. So on the weekly chart, it's not really clear to me on whether I should go long or short. I want to go along with the bullish trend and not try to call the top. But at the same time, we just took a significant pool of liquidity and could retrace lower. Hopefully we can get some better insight on the daily chart. Taking a close look at the daily, I see we are trading below this fair value gap, so I want to note the mean threshold on this order block. If I were to go long, I would like to see this mean threshold respected on the lower time frames. If not, then we could go below this swing low and draw towards the weekly void. So this mean threshold is going to help me determine if I want to go long or short, because I'm kind of neutral right now on the weekly and the daily. Taking a quick look at the 4 hour, we have a 4 hour SIBI here nearby that daily fair value gap. So if we start trading above these, then that will give me confirmation to go long for higher prices. Now we have that daily mean threshold right here, and we'll see if it gets respected tomorrow morning, but note these equal lows. We could sweep these and still respect the mean threshold by trading above it. However, if price refuses to go above the mean threshold, we could take a short scalp aiming for these relative lows back into that weekly BISI. And if price remains heavy, we could also target the void on the weekly chart. Okay, so that's the higher time frame analysis. Now I changed the chart to 1 hour before I go to the next day, which is January 2nd. And remember, I want my entries between 8 a.m. and 11 a.m. So I'm gonna go ahead and adjust the time to 8 o'clock in the morning. Okay, so on the intermediate time frame, I'm looking for liquidity above highs or below lows and inefficiencies. Obviously, the buy side is above these highs. We've taken the 4-hour relative lows with a large displacement through the daily mean threshold. Rather than coming back above it, my initial thoughts is that price will want to go for the sell side below this low and perhaps this low, digging into the weekly BISI. And I'm going to go ahead and get rid of this. This was the previous all-time high. Now I want to keep my eye on this 1 hour SIBI. As long as these lows remain intact, I could go for a short if price comes back to this SIBI, ideally staying in the lower half. Now, however, if we trade through this SIBI, then I'll look for the buy side to be my target. Going down to a 15-minute chart, I can narrow that 1 hour SIBI into this 15-minute SIBI since it overlaps with that daily mean threshold as well. And as long as this looks like resistance, we can go short, aiming for the relative lows. However, if we do sweep these lows first, then trade above this, it inverts to support, then I could be looking for longs for the buy side. So now I'm done with the intermediate time frame. I'm going to go ahead and drop down to a 5-minute chart, and I'm going to go ahead and speed up the time. So on Thinkorswim, if you toggle this button with the double arrows, it'll speed up the market replay to 3x. Now I don't know why my candles aren't fluctuating with every tick like you see with live data. It used to do that, but I don't know if the last update messed something up, or I do use a VPN, so I don't know if that affects this or not, but hopefully it works better for you. Now I'm going to go ahead and skip ahead with this skip forward button. Every time I click this, it'll skip forward 10 minutes. And I'm just going to go ahead and click through until I get a sweep of liquidity, which will be either this high or this low, and or if I see some displacement. Okay, so far no sweep yet, but we are getting close to this high. Go ahead and just mark it out. And let's see, we are getting close to the 930 bell. Let's see if we can get this sweep. Okay, so it dropped at the 930. We didn't get that sweep, but we went ahead and marked this out as the minor buy side. Okay, so we definitely see displacement lower. Okay, now because we left these equal highs here, if we hit the weekly BISI and then we start to see displacement going higher, then I can aim for these equal highs as a short-term target. Okay, but right now I'm not really seeing anything that fits the model. Okay, so far we respected this fair value gap and we have a couple more down here. I don't like how we've already taken out the previous sell side, the previous low, and we went into the weekly fair value gap, but I guess I can try to enter just to give you a demonstration of a entry example. I can aim for, 50% or 25% of that weekly SIBI. Taking a partial probably at like 25, so let's go ahead and calculate the risk. Okay, so as an example, I'm gonna go for a short. My entry is gonna be here at 16,724.75, and I'll have my stop loss above the fair value gap at 16,759.5, and I'm gonna go ahead and aim for just 25% of that weekly BISI. Now, make sure you have your spreadsheet nearby. It's gonna be very handy to calculate the risk. So go ahead and put in the date, January 2nd. Not the right year. We'll go for 2024. And then go ahead, number of contracts. We don't know that quite yet, but let me go ahead and see what those prices are again. So the entry price will be 16,724.75 and the risk will be 16,759.5. So let's say if we do one contract, make sure to put my direction here. I'm going to go for a short. So the risk is going to be 34.75 points, already 0.7%. So if I go for two contracts, it's going to surpass my risk limit. Therefore, I can only take one contract for this example. Now let's go ahead and play it out to see if we can get an entry and see if we can hit our 25% target. Okay, so you can see that we did not get tagged in just yet, but it looks like we will get hit with our entry. Okay, so it did hit our entry. I don't like how the action is going up towards our stop, but we got our stop here. We're not going to change it just yet. And okay, unfortunately, we got tagged out on our stop loss. So let's go ahead and bring back our spreadsheet and mark that we have a stop loss. So let's see, that's going to be over here, one contract. The exit price was our stop loss at 16,759.5. You can see that we took a net loss of $71. So yeah, unfortunately, we did get stopped out on our first backtest example. But remember, the important part is that I followed the model. I'm short biased below that daily mean threshold, as I've said multiple times. I saw displacement and I calculated the risk. It was at least 1-to-1 for the first partial, but unfortunately, we got stopped out. Now, if this happens to you, don't get worked up over just one loss. I will be backtesting the whole year of 2024, so we'll see what the net result is at the end of the year, see whether or not this model can be profitable or not. And if not, then of course, I'm just gonna make some adjustments or build a different model and backtest that. Now, ideally, I want my entries between 8 and 11, so I'm outside of my ideal time window, but there's still some time left, about 45 minutes or so. Let's just go ahead and see how the morning ends. Okay, we took out the, looks like we may be taking out this previous high. And let's see if we get some displacement or another fair value gap that we can enter going for the low of the day. But we are getting past noon here. I'm going to go one more time. And it doesn't look like we're going to get an entry. According to my model, I am done for the day. We did create equal highs here, so these could be targets in the future or even in the afternoon session. But I have to follow my model, which includes time of day, so no afternoon session for me. But these relative highs could be in my sights if they remain until tomorrow morning. So filling out the spreadsheet, you saw the entry price and the risk price. I got stopped out, so the exit price is the same as the risk price for a -1R. The trade lasted about 20 minutes. No comments. I didn't really notice anything insightful, and I may just skip this altogether in my backtesting, who knows. But also nothing for the max drawdown. I guess you could also use the risk price for a full -1R, but understand what your data actually means. For me, I want this column to be the max drawdown before taking my first partial. So if I get stopped out, I'm not gonna go ahead and enter data in here because I didn't take a partial. Now you can do it either way, just understand how to read your data. But that's pretty much it for this video. If you watched through all 3 parts, then my hat's off to you. You have more mental fortitude than most, and I'm sure you'll work hard and be successful in your trading journey. Nevertheless, I hope you were able to follow along and take something away. Please help me out by giving this video a like and subscribing, as I will continue backtesting 2024. I'll even try to live stream on the weekends so we can interact through the chat. But until I see you guys next time, safe trading.